Yes, correct. Hi guys, welcome back to our channel. We're very honored to have Dr. Steenbarger for in our show for an AMA session. To give you a brief about Dr. Brett, he is actually a professor of psychiatry and behavioral sciences at New York Medical University, and he turned towards trading in the 2000s. From then, that is when he's in the market, and he's written very famous books on trading psychology. And if you guys want to follow him, he writes at tradersfeed.blogpost.com. And he's currently working as a performance coach to a multi-billion dollar hedge fund. So I'm very happy to have you on the show, Dr. Brett.
Well, thank you very much, Priyanka.
Yeah. So I would take only very little of your time, valuable time. And can I move on to the questions?
Sure, let's go.
So this is from an anonymous Twitter account who follows our show very closely. The first question is how to self-criticize one's trading habit in a healthy and a helpful way.
So run that by me again. How
To self-criticize one's trading habit in a healthy and a helpful way.
So self-criticism.
Yes.
As a habit. Yeah. So the key here psychologically is whether the self-criticism is constructive or not. So I may place a losing trade and I could criticize myself and tell myself what an idiot I am. Well, that's not very helpful. But self-criticism in the sense of correcting mistakes, in the sense of learning from our mistakes, that is very useful. So the way I put it to traders is that we won't always have a financial P&L, but we certainly can have a learning P&L. We can always be positive in our learning P&L, even when we're down in our financial P&L.
Yes, absolutely. So I have another question from Manish. How do you know it is not for you? Where is the line between perseverance, inability to say no, and resulting in a life of misery?
That's a great question. It's a very insightful question. And I'll respond with something I've shared in my books. That I left teaching full-time at the medical school in 2003, and I decided I would trade full-time. I had done a lot of research and I love financial markets. I've traded since the mid-1970s, and I traded full-time. I made money. I hated it. I absolutely hated it. Now, why? Because I'm a psychologist for a reason. Mm-hmm. My greatest joy is to be part of someone's life in a meaningful way. When I was sitting in front of a screen and trading all day, I missed that. And so it wasn't for me. Now, I've stayed involved in financial markets on a different basis, and I work as a performance coach with people in financial markets, so I get to enjoy financial markets. But I found that if I was trading full time, it was, to use the good quote, a life of misery. What the psychology research tells us is that each of us has distinctive strengths, things that we're really good at, things that speak to us. And sometimes those are not financial markets. Maybe they're artistic endeavors or religious interests or purely scientific ones. So we have to find out what speaks to us and go with that for our career.
Yes, doctor. This is another question from Shardul. How to deal with euphoria when things are rosy versus how to push through in a tough period. And that is how the markets have been since February. So this is a question from Shardul.
Yeah, if you're feeling euphoria when you make money, you know you're in the wrong place. In fact, making money and making a good amount of money is a psychological risk factor because it's so easy for confidence to become overconfidence.
Yes.
And so we want to be quote unquote euphoric about trading well, about the process of trading. Now, these are probabilistic endeavors. Sometimes we're going to make money. Sometimes we're not going to make money, even when we're really good at this. And so there are always going to be drawdowns. There are always going to be periods when we really make money. And if our mood is dependent on our P&L, then we're going to go up and down with our P&L, and that's not a healthy lifestyle. So the focus has to be on, are we learning? Are we getting better? Are we making improvements and getting euphoric over our development, not over profits and losses? And by the way, yeah, whether markets make us much money or not is as much dependent on the markets as us. There are some markets that offer more opportunity, less opportunity, some market periods that offer more opportunity, less opportunity. If we judge ourselves purely on the P&L, then we have no control over our self-esteem. My goodness, that's not a very healthy way to live.
Yes, indeed. So moving on to my next question. This is from Amit. How to turn off all the information overload that is out there in terms of news, new books, Twitter, etc. There's a lot of information out there. Like, how do you mellow it down? How do you turn it off? That is the question.
Yes. So, you know, I'll tell you what comes into my mind, Kraka. So in graduate school, in the mid to late 70s, I studied with a group in New York City that met with the novelist philosopher Ayn Rand. Okay. Yeah, and so when someone would ask Ms. Rand a question, she would occasionally give a little look and say, check your premises. And what it meant was that the premise of the question is problematic. I don't think there is a lot of information out there. I think there's a lot of noise out there. There are a lot of people giving their opinions, and there are a lot of people drawing random lines on charts. Is that really information? So what we need to do is figure out what data, what information is most relevant to the trading that we do. So for instance, people's opinions about inflation, people's opinions about the economy, people's opinions about markets. In my trading, I don't listen to it all. That's not information. That for me is noise. What I look at are the actual transactions in markets, the actual trades, and where are those trades occurring in a bid-offer matrix? So are the transactions happening closer to the bid, closer to the offer? And we can find out if people are bullish or bearish, and if the market is trading more bearishly, more bullishly. We can look at changes of volume to see who's involved in the market. That, for my trading, is information. So, but most people, most traders, I would say, probably need to go on an information diet.
I agree. There's too much noise out there now.
It's incredible. And, you know, I've been doing this since the 1970s, and there's none of the online stuff was available then, right? So it's just exploded with all of the tweets and all of the chats and all of the, can drive you crazy.
Yes. So this is a personal question from me, like not a question. I would love to take your feedback. I've started journaling for our trading show. So is there something that you would like to add here? So this is a number, date. Is my screen visible, doctor?
What's that? I'm sorry.
Is my screen visible?
Oh, yeah. I can see, yeah, you have an Excel sheet and you have.
This is my our show's trading journal. So these are the columns that I have, like content. The symbol is what we trade in, and going long or short, what is the quantity and entry value, date and exit, PNL, and what were the remarks, whether it was an option trade or a long-term holding or a mid-term holding, and what was the rationale behind that trade, And the link for, because this is a public show, we have posted link for all our rationals and from where we get the idea of the trade. And apart from that, tax implications and self-improvement. So these are all the contents that we currently journal. So would you like to add something or give a feedback on this?
Yes, this looks really, really good. What I would say is that in keeping with the psychological principle of learning, of deliberate practice, we would want a column that summarizes what we have learned in this trade and what we could do better, what we could do differently, or what did we do very well in that trade that we would want to make sure that we did again. But what is the learning takeaway from the trade that I could apply to the next trades? Yeah, so that turns the journal into a very explicit learning platform. Now, the other thing that I find very helpful is turning a journal like this into a database.
Okay.
So that you can actually filter, you can sort through the database and say, okay, what was the P&L for all my long-term holdings? What was the P&L for all my option trades? And then what were the comments? What were the learning lessons for the option trades? What were the learning lessons for the medium-term holdings? And so you can slice and dice. There are software platforms that allow you to do this. Trader View is one of those. But I think that would be an additional facet that could be very helpful.
Thank you so much for this. I will take all your feedback.
Yeah. But it's a great idea, though, and again, it really fits with what we were talking about earlier. Of instead of getting euphoric about profits, you're really focusing on the learning and getting better. And what you've put together is a useful framework for tracking performance and becoming a learning tool.
Yes. Moving on to another question. This is from Vinay. How to overcome risk aversion, take bigger bets despite knowing the odds are in favor of me?
Yes. It's a very good question. The problem here is that each of us is wired differently in terms of our personalities, so that some of us are not by nature, so to speak, risk takers. In fact, when at one of the hedge funds where I worked full time for many years, we did research on what makes portfolio managers successful. And one of the interesting findings was that the personality and cognitive strengths of high Sharpe traders was different than for high absolute return traders. So Sharpe ratio, to remind everyone, is risk-adjusted returns. So you make a good amount and you tend to not lose very much. And so you have a gradual, smooth, upward profit curve. People who have high absolute returns tend to be bigger bet takers, and they can have big wins, big losses, big wins. And over time, they may make more money in absolute terms than the high Sharpe person, but the high Sharpe person makes it more consistently. Those are different personalities. And also there are different cognitive strengths that go with that. And so the important thing here is to know how we are wired. The high Sharpe traders, the ones who are successful, they don't like drama. They don't like big ups and downs, and they don't do well emotionally when there are big ups and downs. They also don't like drama in their personal lives. Like there's some people who love like stormy marriages or friendships. Like I can tell you, I can't stand that. I would never. No, I would not do well. So the important thing is to know how we're wired and not try to make ourselves into something we're not. And so it may be the case that finding more and different ways to be consistently profitable is more important than to make bigger profits.
Yes. I think when I used to, be a bigger risk taker back then, but now I've mellowed down.
Right. Now, that being said, obviously during your learning curve, you want to grow your trading. And so the idea is to do it gradually, not in huge increments. If in general your trading has been successful and consistent, then just increase your sizing by a relatively moderate fixed fraction. So 10%, I'll put all my positions on 10% larger. Large enough to make some difference, but not so large as to feel overwhelming.
Yes.
And then once you get used to that level and you're making money and you're consistent, go to the next increment and the next increment.
Yes, doctor. I think I'll take that and put it in my trading way, like how I do my trading also. And moving on to the next question.
Mhm.
It's from Milind. Any books that you recommend for a new trader apart from your books, of course? So that was this question.
Apart from my books, and here I was going to pitch my own books. Oh my goodness. Okay. Yes. Books that would be good for traders. So much of it depends on people's interests and people's needs. Victor Niederhofer has a book called Education of a Speculator, which I found really insightful early on in my trading career. And I certainly would recommend that. And many people recommend the Market Wizards series by Jack Schwager. And especially some of the earlier ones in that series. There's some human learning lessons that the people interviewed pass along that I think are very helpful. And I would encourage, in terms of reading, for traders to look at who is writing good stuff online. There are lots of sources online that I think are quite informative. I've been writing my blog, since I think 2006. And so there are just a huge number of blog entries. And if anyone ever had an interest in a particular topic in trading psychology, they could just Google the topic. Maybe the topic is performance anxiety, and then they type in trader feed. It's all one word, TRADERFED. So performance anxiety trader feed, and you'll see all the blog posts that I've written on that topic. And you can do that with other writers as well. And I think that can be a very useful way of accessing practical information.
I think I'll right away after the session go on to the blog and then start my reading. So
You're right.
The next question is same from Milind. How to tackle burnout over a long period? Should you take short breaks or take long breaks from time to time?
Yeah, it's funny. I had someone email me on this topic just last night. Yes, taking breaks is really important. And what I passed along in my response to the question was that when I started work in Chicago, working with traders who were pretty high frequency traders, the average holding time was 9 minutes. So that involves a lot of focus, a lot of concentration through the day. So we would break up the trading day into 2 trading days, the morning and the afternoon. And we had separate risk limits for the morning, separate risk limits for the afternoon. And in between, there would be a nice break around noon, Eastern time, so lunchtime. And that would also be a time to review the morning trades time to review markets from the morning, and make changes and adapt for the afternoon. So what that did was give some break time for people to refresh. Focus is so important to trading. So it gave people time to refresh, but it also created a learning mechanism midday. And perhaps most importantly, if people lost money in the morning, they had a whole new day in the afternoon to come back and make money. And so psychologically, that was very helpful. So yes, taking breaks is very useful. I would go just one step further and say that taking breaks in life is important. Those are called vacations.
Yes.
They're very important. The research literature in psychology tells us that we can deal with lots of stress if we also have lots of what's called well-being, which is psychological wellness. So if we do things that are fun, if we do things that are meaningful, if we do things that bring us close to other people, if we do things that give us energy and maximize those things, then we can deal with lots of challenge and stress in our work.
Yes, I agree. So that was all the questions I have. Cora?
Thanks, Brett. Thanks a lot for your time. One final question. What's
Yes.
view of the markets into the second half?
What's that? I'm sorry, I was having trouble hearing.
What's your market take into the second half of the year?
Oh, what's my market take in the second half of the year? Well, we're in a different regime. The kind of markets that we've seen the last how many years are quickly not happening right now. Because of inflation, we're seeing rises in commodity prices. We're seeing weak bonds, so that means rising interest rates because of inflation. We're seeing weak stocks because it's hurting growth prospects. And cash is losing value. Just today, we had a CPI print in the US of well above 8% again. So cash is losing its value as well. This is a unique period. I don't believe we've seen a similar period since the 1970s. And it's very difficult for young traders who have been accustomed to buying dips and who have been accustomed to lower volatility markets to be able to adapt to this new paradigm.
All right,
When we had this scenario in the 1970s, if you look at the top of the US market in 1972 and the eventual bottom of the market in August of 1982, and you calculate the amount lost on an inflation-adjusted basis, people lost around 80% of their money or so. So what we are seeing, I believe, is potentially catastrophic for the average investor.
all right, Brett. I think that's a warning to us not to go overboard and do risky kind of trades. And
well, the interesting thing is that we have lots of volatility, and for a short-term trader, it could be a very good trading environment. I just think it's a terrible investing environment. But it's a challenge. I should say a challenging investment environment. But in terms of short-term trading, we're getting lots of volatility and lots of different instruments. I think there's a lot of opportunity for shorter-term traders.
Yes, Brett. Any final words before we wind up the interview?
Okay, well, maybe we can finish with this. I teach at a medical school, and I participate in the training of physicians. So we teach medical students, we teach medical residents how to be physicians. And there's a saying in medical education about the process of learning. See one, do one, teach one. In other words, we learn first by observing, then by doing, and then by cementing our knowledge by teaching others. And that's really how medical school proceeds. There's an extended period of seeing where there's coursework, studying, there's a whole range of course time where all you do is observe successful physicians doing what they do. And then gradually you do medical procedures and interviews under supervision, and you get feedback about what you do, but you're always watched, you're always accompanied. And then gradually you become a little more autonomous until you start to do on your own. And by that time, you're teaching the beginners and cementing your knowledge. Many, this is a big idea. If there's just one thing you take away from our time together, this is it. Many psychological problems in trading come from trying to short circuit that learning curve. People are too eager to start trading. They don't spend enough time observing and studying markets, observing successful traders. And so they end up being like a medical student who in their third week starts doing surgeries. Well, what would happen? That would not be good. So, and then they get frustrated because, oh, why are my patients dying? Well, it's not because they need psychological help. They don't need psychology. They need a proper learning curve. That is a very common problem. Where I work with, you might be familiar with the trading firm SMB in New York. They run a training program for traders, and it's all based on observing successful traders, being part of a team, and then trading on a simulator so that you get practice without the risk of losing money. And only when you're good at trading on the simulator and developing your own ideas and putting together your particular ideas about trading, called a playbook, only then do you start to take risk. Following that learning curve is the most important thing that I think your viewers could do. Thank you for having me. I appreciate the opportunity to share some ideas.
Thanks, Brett. And perhaps I would see you in first week of December.
Oh, that would be awesome.
Thank you so much. It was an amazing 30 minutes.
Okay, well, thank you, Priyanka, and thank you, Cora.
Thanks,
and
Brett.
good luck to everyone.
Good luck.
Have a good
Bye.
day.
You too. Bye-bye.
Bye.